Hello, it's Justin, and this video is about how to invest if you're not a professional investor. And that means it's a video for people who may know nothing about investing or know nothing about finance or accounting, and that's perfectly fine. And if you do know things about these topics, then you should still keep watching because the insights in this video could be very helpful to you. So without further ado, I would first suggest that if you don't know anything about investing, you try to look for stocks that professional investors are already picking and analyzing. So there's a website called dataroma.com, and in that website it compiles all the information and stock trading activity of the top hedge fund managers or fund managers and the top investors. So the biggest investors are required to disclose their holdings and their trading activity every quarter. And that is all compiled under dataroma.com, so you can go on that website and look for the stocks that the best investors are investing in. And you can buy what they buy and sell what they sell. So that's very simple, and often they trade the same stocks. So just mirror their activity, and that cuts down the amount of stocks you should think about and focus on. But there's still a lot of stocks out there that the top investors invest in or sell. So there's still a lot of stocks that you want to whittle down. And even though that's a smaller subset than the entire stock market, I think you should start with that and then whittle it down and pick a few stocks to invest in. So what I would recommend is that you learn accounting, because accounting is an essential skill if you want to be a great investor. And there's many ways to do this. I would suggest Khan Academy. That's where I learned accounting not where I learned accounting, but where I learned a lot of different subjects when I was in high school and college, and the teacher or professor wasn't explaining it very well. And actually, when I was in college, my accounting professor was very good, so I didn't have to use Khan Academy, but they do have accounting courses. So I would suggest Khan Academy. There's also Lynda, which is another online course that can teach you accounting. And there's also edX, and that can also teach you accounting, and that's also online. So Lynda and edX I haven't used myself, but they're very reputable, and you could learn accounting through those two sites as well as Khan Academy online. But there's a lot of resources to learn accounting. It's actually simpler than it looks, and you could even go to a local Barnes & Noble and buy an accounting book that teaches you accounting. So it's pretty accessible. It's not that difficult to learn accounting, and once you grasp the basics, it gets very simple, and you'd really understand what goes on in an annual report or a quarterly report when you're analyzing stocks. So make sure you learn accounting, because that is not just an essential skill for investing, but an essential skill for business in general. So once you learn accounting, then you could whittle down the stocks that you are looking for when you try to mirror the top investors, and that's already a smaller subset of stocks, so you already whittled it down from the entire stock market. And when you learn accounting, you could look at the stocks individually and whittle down even more. And I'm going to share with you 5 things to look for when you are picking a stock. So the first thing to look for is that the stock is cheap, and that means that it has a low price to earnings ratio. Obviously, there are different methods of investing, and some investors don't do this because some investors target growth stocks that aren't earning a lot per share, but they have the potential to in the future. And most of these stocks are technology stocks. And yes, that can be effective, but it's not very easy for the non-professional investor. So I would advise against that until you get very knowledgeable in investing. So look for stocks with low PE ratios, which means they have low price to earnings ratios, and that means the stocks are cheap. And when stocks are cheap, it usually means that it can't go much cheaper than that, and if it goes up, then it can go up a lot. So that is definitely a good way to find stocks that are cheap, so you could sell it when it goes back up. The second thing I would recommend you look for is stocks with high return on capital. And that's something you will learn when you learn accounting. But companies that return a lot on the capital invested are good companies, and companies that don't return a lot on the amount of capital invested are bad companies. And that's just a fact of business. Because let's say I invest $100 million in a company, if that company only returns $120 million, that's not as good as if the company returns $200 million. And that's what return on capital is. It's how much the company returns based on how much capital was put in that company. And likewise, if I put $1 million in a company and it returns $120 million, that's a lot better than if you put $100 million and that only returns $120 million. So look for stocks with high return on capital. The third thing I would advise you look for is the insider holdings and trading activity. So for every publicly traded company, the top managers, the CEOs, CFOs, COOs, and the board of directors, and the top people in the top positions, they have to disclose their holdings of the companies. And that is something you should look for, because if those people are buying more and more stocks in that company, then that's usually a good sign, because those are the people who know the company the best. They are the insiders. And if their activity is showing that they think the company is going to do well, then it's likely that the company will do well, because they are more likely to know than anyone else. And if they're selling their holdings in their company, then that's a bad sign, because again, they know the company better than anyone else. So if they're selling it, it shows that the company isn't that great. And people act in their own best self-interest. So don't look at everything. I mean, look at what they say in public, but it's more important to look at their actions, because everyone is out for their own self-interest. So definitely look at insider holdings and trading activities, and also make sure that the managers of the companies that you invest in actually have a stake in the company, and a big stake preferably, because that means that they are more accountable to how well the company does stock-wise, and they'll care more about how the company does stock-wise, because they have a lot of stocks themselves. So obviously they want the stocks to go up. So that's the third thing that I would say you should look for when investing in stocks. The fourth thing you should look for is low debt. A lot of companies have very high debt these days, and although they could generate a lot of earnings, and that looks good in terms of other data like PE ratio or return on capital, it isn't as good if they have to pay all of that profit to the people that hold their debt. It's not good that they have to pay a lot of debt. So definitely look for stocks that have low debt. And this is just something obvious. You don't want to own something where the company owes another company hundreds or billions of dollars, hundreds of millions or billions of dollars. And the last thing I would say you should look for when investing in a company is cash flow, because earnings does not necessarily reflect cash flow, and cash flow is what puts money in your pocket in terms of dividends, and it's also what puts cash in the company's pockets when it needs to invest, when it needs to run its operations, when it needs to pay people. So cash flow is key, because I think it is definitely a more accurate reflection of how well the company is doing than just pure earnings. And the cash flow you should be looking for is free cash flow, and you'll learn that when you learn about accounting. So these are the 5 things that you should be looking for when you're investing in a company. So that's low PE ratios, high return on capital, insider holdings and trading activities, low debt, and cash flow. And that is good if you are a non-professional investor, and if you are a professional investor, these are still the fundamentals of how you should invest. Obviously, there's other methods of investing that I'm not too keen on, like quants and growth investing, and I think they're higher risk. And yes, you could be successful in that, and I do look at ways to do that, but since this video is for non-professional investors, I would not recommend that until you get better and better in investing and analyzing companies. So I hope this video helps. Give this video a like, comment, and subscribe, and hit the bell notification so that you get notified when I put other videos like this that can help you in achieving financial freedom. Also, follow me on Instagram, where you can DM me, and follow me on Medium, where I write more in-depth articles about similar topics. Thank you, and see you next time.